Hello, everybody. Good afternoon. The Fed drama has not stopped. We've got continued Fed spotlight after a huge jobs number last Friday. So we're going to break down what the jobs report means to the Fed and the markets all here this week. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday at 3 is to bring to you the market news and data that we're watching and hopefully weed out a bit of the noise along the way. So this week, probably no surprise, I almost hate this because I am very tired, as I'm sure all of you are, about the Fed's spotlight in the market and how much it drives the market here the last year or so. 3 years, let's call it. However, it's very important. And so I will add a little fuel to the fire and keep sharing what's going on, because it really is what's driving a lot of market movement and has been for quite some time. So although I'm probably just as tired of it as you are, it is very important to cover, and it does have some big impacts. So we will make sure to share that here today. Our question of the week is also going to be what's ahead for the Fed. Now, I will share a little bit on that, but what I will also share is that coming up next Thursday, February 16th, we're hosting a free online learning where we're really going to talk about some general financial planning principles, the Fed's path ahead for the new year in the markets, and also some legislation changes with the Secure Act 2.0 and what you can be doing in the year ahead to get a little leg up on that. So before we get to that, I'll back up and I'll start with last week, which will kind of transition us into the Fed speak here. So last week on Friday, we had non-farm payrolls numbers come out. And if you remember from our session last Thursday, it was really interesting because we had the ADP employment number come out last week, and it did not look good. Now, we had talked about, well, is this really accurate, or how much can we really rely on this ADP employment number? And all of a sudden, last Friday, we had non-farm payrolls come out with a huge surprise. It was a giant number. We added over 500,000 jobs in the month of January. And, again, quite a discrepancy from what that ADP employment report showed. So with that, what we saw, the markets just pulled back. So Friday and Monday, I believe it was, the markets pulled back quite a bit on the jobs number news almost entirely, right? Basically, what had happened is the market, the market's watching what the Fed says, it's watching inflation data, and it's watching jobs data, because the Fed's mandates are inflation and jobs. So as long as jobs are secure, and we all know some of the challenges with some of the way that they report jobs, but as long as jobs are secure, the concern from the market's perspective is that means that the Fed can continue to hike rates rapidly without little impact to the other side of the mandate. So that's why we saw the markets drop on Friday. That's why we saw them drop on Monday. And then on Tuesday, the Fed chair came out and spoke again. But basically, it was interesting. The markets bounced quite a bit as the Fed talked, because what he did, I think, was really reiterate what he had shared the previous week. However, it didn't really address the big confusion from last week. He shared that he's going to continue to hike, that they plan to continue to hike, but he didn't really clear up the confusion from last week, which I think is why we saw the markets pop, right? I think a lot of people expected them to take this opportunity to back up a little bit and really come out with a clear message. It was still a lot of hemming and hawing, and I think that's why we saw markets pick up there. Today, on Thursday, we had initial jobless claims come out, and it was 196,000. So it's actually another very strong number. Technically, this is the first time it's picked up since 6 weeks, I believe, or something like that. And so based on the news, we actually saw the markets open up pretty high. We saw another pop. Now, that's kind of fizzled out through the day. But it's just, it's amazing to see how much the markets are moving almost entirely based on the Fed. The jobs numbers have nothing to do with the market reaction. It's how the Fed is going to react to the jobs numbers that is moving the market. So it's really interesting to watch. I'll kind of tie this all in a little bit here with a question from Chris about what is ahead for the Fed. But before I jump into that, coming up next week, definitely stay tuned. We've got consumer sentiment. We have CPI, so we'll get some inflation data, and guess what? The market will probably make some assumptions as what that means for the Fed. And then we have retail sales. So consumer sentiment, CPI, retail sales, big week ahead here. As far as our question of the week, Chris actually asked, what is ahead for the Fed? And again, I don't mean to just punt this, but our plan all along has been to share a lot more detail on this in our free online learning on Thursday the 16th. So again, I'll put a link below if you can, if you do want to join us, go ahead and jump in there to pre-register and you should be all set. But what I will share is just a kind of a high level view on this, and then we'll get into a lot more detail next Thursday. Basically, what I will share is that I expect the Fed to do what they say they're going to do. The Fed has been very clear for about the last 9 months or so, 12 months, I guess, really now, about their path and what they plan to do in the next meetings. And that is exactly what we've seen. They talked about hiking aggressively all the way up until this last one. They said they're going to probably start to slow down. They slowed down. Now they're still hiking, but at a slower clip. So I believe that's going to continue. I think that the Fed is concerned, although they really shouldn't be, but concerned about upsetting the markets, and they're going to voice their plan well ahead of time. Now, that said, what I want to really share in today's session is to be cautious of looking too far into the Fed's tea leaves, because what happens every time is we have this wild speculation between meetings. The Fed shares basically what's going to happen, more speculation between meetings. And the next Fed meeting is until March 22nd. So between now and March 22nd, I believe we have 2 CPI reports that come out. We have another jobs report that comes out, and I believe PCE as well. So keep in mind, there's a lot of data between now and then that, that the Fed will account for. Again, I think generally they're going to voice what's going to happen, but there's a lot of data between now and March 22nd. So hopefully that's a helpful start to that answer, at least gives you kind of a glimpse at what we're watching. But again, if you want to join us next Thursday, February 16th at 5 p.m. Pacific, we'll break this down a lot. We'll talk a little bit more about some of that data, the data between now and that March 22nd meeting, and talk about how that can really relate to the Fed's decisions, so that you have a little more clear path of, some if-then type of scenarios that may be in the cards here to come. So thank you as always for joining me. Again, I'll put the link just below. Go ahead and follow that if you would like to register. We will either see you there next Thursday or both, or see you Thursday at 3 for our weekly update as well. Have a great upcoming weekend. We'll see you next Thursday.